take a guy like Warren Buffett. When you think about investments, you think about a Warren Buffett, right? You take a Ray Dalio. You got to put him in there, right? Ray Dalio, what he's done himself. You know, Buffett is talking about silver. Hey, he put his money in silver. And right now, I think he's sitting on $200 billion of cash is what he's sitting on. Imagine if that $200 billion would have been in portion, crypto, 800%. You're talking about $1.6 trillion is what Berkshire Hathaway would have had. It would have been the largest company in the world, even bigger than Amazon and the other, if they just would have put their cash in there. But Buffett is not bought in. Ray Dalio's critical about it because he thinks regulation is going to get to it. Do you think what is happening is the old timers who have had their set of philosophies that's worked for them for decades, they are so set in stone with the way they see what's worked for them that they're not willing to break from it to say, hey, maybe we have to take a look at what's going on with crypto. Do you think the next phase, a lot of these old school, heavy duty people that we've respected for decades are going to be exposed? Not even exposed like they don't know what they're doing. Obviously, they know what they're doing, but maybe their method of investment is outdated for 2021. And these are people you and I admire. These are people that we have a lot of respect for. What do you think about that?
Yeah, so I think it's important to call it right out of the gate. Anyone who says that Warren Buffett is an idiot or Ray Dalio or, name your kind of favorite kind of historic return investor, they're just being intellectually dishonest. So they had an epic run. They're absolutely some of the best investors in the world. Now, with that said, they made most of their money or the decisions they made that made most of their money in a different world. Right? It wasn't a digital technology driven world for the most part as we know it today. And so when you look at, a Warren Buffett, for example, he hasn't outperformed the S&P for the last decade. Now, again, that doesn't take anything away from his track record. He's one of the best investors in the world, but the world has either changed or he's the rational person in an irrational world. So you can take your pick as to why this has played out this way, but he hasn't beat the S&P in the last decade. And so if you had taken his approach, you've underperformed. Now, there's plenty of people who say, well, look at somebody on the extreme other end, Masayoshi Son from SoftBank, right? Who I don't think anyone thinks that Masayoshi and Warren Buffett sit down and they're like, we're going to pick the same stocks. We're going to pick the same investment strategy, right? But Masayoshi, everyone thought he was crazy. And now all of a sudden it looks like SoftBank's vision fund's going to do pretty dang well. And so I think when you start to really unpack some of this, you've got to look at, okay, what is the environment that we're in, this technology-enabled kind of digital world? What are the investments? And what I think that we're starting to unpack here is there's a lot of hero worship that happens in the financial markets, right? It's because you did something 10 years ago or 20 years ago, of course you're going to be smart here. Sometimes that is true, but I think that's a very dangerous precedent to kind of fall under. And so what I like to do is just simply look at and say, okay, what are you trying to accomplish? For a young guy like me, it's asymmetry, right? And so that asymmetry ends up being really important because you can risk less capital and there's a higher payoff, more risk, but higher payoff. And so if that's what you're looking for, it's actually the exact opposite thing of what Warren Buffett is trying to accomplish, right? Warren Buffett understands he's got $200 billion in cash. He's got this big machine. He wants to protect his wealth. He wants to continue to compound it. And if you can compound, hundreds of billions of dollars at 8-10% a year, you're going to do just fine. Bitcoin has compounded at 200% compound annual growth rate for a decade. So simply just holding Bitcoin, right, would have drastically outperformed Warren Buffett. Now, that doesn't mean that either one of those people are right or wrong. It's just they're optimizing for something different. And so what I think will end up happening is the older generation, the folks who are kind of at the ends of their career, they're not going to come around, right? A lot of them will even say that I'm not a technology investor. I don't understand this stuff. It violates a lot of my worldview. I'm a value person or whatever their strategy is. What I do think is likely to happen though, is a lot of the younger people in their organizations, as they rise up in kind of power, influence, and positions, they'll start to diversify into a lot of this. So there will be a day where Berkshire Hathaway buys Bitcoin. It's probably not going to be Warren Buffett pulling the trigger on that decision. It'll probably be somebody else.
Listen, foresight, great prediction of what could potentially happen, but it's got to be pretty tough to be them because even the other day, for example, when I'm asking about the biggest enemy that crypto may have, Bitcoin may have, right? Janet Yellen, not a fan. You know that. She's not a fan. Powell, not a fan. Ray Dalio said there's probably going to be regulation coming to it. I mean, I can give you a list of names, plethora of names politically that are not for what can happen to crypto and Bitcoin and all of that. What is the worst thing? Because some people say, if you really understand Bitcoin, you will know they can never regulate Bitcoin, right? You've heard that saying before millions of times by pro crypto folks. But what is the worst thing a Yellen, a Powell, a Biden, the political people can do to the crypto world?
Well, I think they've already probably done it and hasn't stopped it, right? And so I'll give you two scenarios. One is an international scenario where we have some data points, and then one's what's happening in the United States. So internationally, we've seen people ban it, right? We've seen Pakistan, we've seen Nigeria, China, we've seen multiple countries go and ban it. And when they ban it, guess what happens? Adoption goes through the roof. Right. So actually by banning it, you're almost running a marketing campaign. And especially in those countries where people already have a distrust for their government, the second the government says, don't do something, they ask, why does the government not want me to do that? Right. And they actually go and they adopt it.
Yep.
And so I think that banning it is a great example of what not to do for a government. If a government wants to, quote unquote, attack Bitcoin or be adversarial to Bitcoin, the better thing for them to do would probably be overly regulatory, right? Or like have an overreach in the regulatory realm. And so if you look at Bitcoin, Bitcoin is the most regulated currency in the United States. And here's what I mean by that. If you and I go to dinner and you buy dinner with dollars, you simply pay sales tax on that transaction. If I buy dinner with Bitcoin, I not only have to pay the sales tax, I then have to pay capital gains, short or long term, on the purchase because it's treated as property for me now cashing out to pay for this thing. And so from a regulatory standpoint, there's actually a financial incentive for me not to use Bitcoin in the United States, right? That is a obstacle that even though it's in place, this year, Bitcoin's on-chain transaction volume, meaning people actually using it, not for trading on exchanges, but actually using it for whatever purpose, will be over $5 trillion of on-chain transaction volume. That's more transaction volume this year and last year than Venmo, Apple Pay, or PayPal. So people who say no one's using it, like, wait a second, this is more popular than.
Say that Jamie Dimon said Chase is $7 trillion. So wait a minute. Did you just say it's $5 trillion just for Bitcoin in the last 12 months?
If you take the current on-chain transaction volume, you just annualize it, right? It'll be over $7 trillion of transaction volume on the actual Bitcoin blockchain this year in 2020.
7 or 5? 7 or 5?
7.
Got it.
Yes. And so when you start to unpack some of this, you really start to understand that, okay, even though there is this big obstacle around taxation, right? People are still using it. The second thing is everyone forgets you don't actually ever regulate an asset. Right? It's not like you're going to put the dollar in jail or you're going to go and get the dollar bill and scream at it and say, give me your tax money. So we'll same thing with Bitcoin, right? The asset itself isn't what gets regulated. It's the organizations and the people who use it, transact, support, and have related services to it. And so in the United States, a crypto company is subject to all of the same rules and regulations as any financial company. If you need to have a money transmitter license in the regular finance world, you need to have it in crypto. If you need a broker-dealer license, KYC, AML, all that stuff. But in certain areas, let's say in the state of New York, if you're a crypto company, you have to get an additional license that the other financial companies don't have to get. It's something called a BIT license. So it's actually harder for you to conduct a crypto business in the state of New York than it is for you to conduct a traditional financial institution. And so in some crazy way, Bitcoin and the crypto ecosystem is more regulated than the traditional financial system. And that kind of blows people's minds because they're like, what do you mean? How is this possible? Whatever. Well, if you tax it more than other currencies, and then you make the companies get additional licenses that other financial companies don't need to get, then what you're doing is you're actually putting up these obstacles. Even though all of that's occurred, you have in the liquid market a $2+ trillion market cap. Bitcoin's $1 trillion of that. And then on top of that, you've got multiple multi-billion-dollar companies within the United States that have been built in this industry. And so no matter what regulation you put in the way, even if in other countries you ban it, or in the United States, you simply try to over-regulate it, it doesn't matter. People have spoken. This is superior technology. It's a better system. They want it and they're going to use it. And just like they did to Uber and Airbnb, where they try to use regulation and kind of all of this political overreach, it doesn't matter. If people want it, they're going to get it. And that's the new paradigm in the technology world, is the technology is superior from an adoption standpoint to any sort of regulation you can put in way. You can disincentivize it all you want. If it is better and it has product market fit, it will be adopted.
So if you like this little short clip from an interview I did, click over here to watch the entire interview. And please don't forget to subscribe to the channel. Take care, everybody. Bye-bye.